Good afternoon, ladies. It is Thursday of week 4 of university. So I just want to take a minute to say congratulations. It is week 4 of university. And so, of course, as now some of the apprehensions are building and anxieties and different frustrations and things are coming out, I did want to make note and touch base on a few things that I think will be really helpful. So I have been trading now for a few years, and I graduated from university last year. And one thing that I remember and keep remembering even on this journey, that it's important to not forget the basics. So as we gave feedback last week, I noted a few things and saw not only with my girls, but just across the board, that as we're introducing new things, it's important to remember that it's not just a brand new week and you forget everything that we've already taught in the past. So one of the beautiful things about Girls Gone Forex is that it continues to build week by week and course by course. So don't forget what you learned in Essentials, don't forget what you learned in prep school, and don't forget what you've learned this far in university. So even though we introduced Fibonacci last week, it didn't mean don't do your multi-time frame analysis and don't place your support and resistance lines, right? So I saw several charts that didn't really look like it had the multi-time frame analysis done and didn't have your support and resistance lines in place. But know that those things guide how you're going to place your Fibonacci and how strong of a levels that you are going to have that you can automatically see. So you don't have to, I mean, yes, you can eyeball it as time goes on. You'll get more comfortable doing that. But one of the beautiful things about having your support and resistance lines in place when you place your Fibonacci is that you can actually use what you already have on your chart to guide you. So for instance, make sure we're going to use this pound dollar area right here. It's not where current prices currently is. Where prices currently are, but I do want to show you just as an example. So whether it's an uptrend or a downtrend on your chart, make sure that you're always going from left to right. So I saw a few things here. So if you did it backwards, so say you just said, oh, okay, well here's the low point and here's the high point. Okay, so what's wrong with this picture? Well, the numbers and things that we have you place with your Fibonacci actually mean something. And so as you go along and as you narrow down your pairs, you'll start to see that certain pairs respect certain price levels more than others. And so if you do them kind of upside down or backwards like this, so I went from here and just went back, so I went from right to left, you'll see the numbers are flipped. Okay, your 236 is way up here, your 618 is way down here. And so what the Fibonacci is actually saying is, if you remember in prep school, we talked about pullbacks. So these are actually pullbacks or retracement levels. So these are percentages. This is 23.6% of a retracement of price. If they're backwards, then it's not being true. It's not being valid. If I'm saying this is a downtrend and then this is 23.6 retracement of this downtrend, then that's not true. So I'm going to flip this. I'm going to actually delete these and just draw some new ones. What you want to do is start at the top and go to the lowest point. So now this makes more sense. And so I'm going to use my support and resistance lines to see, okay, I like this matchup. You can kind of move around and see, but you can see this one's pretty close to that one. It's pretty close to this support and resistance line. This is almost right on top of that one. So that matters because I've already said that those are areas of significance. So if my Fibonacci lines up with it, then perfect, even better. But going back to the percentages, I'm saying this is a downtrend and this area is 23.6% of a retracement of price. Or this line here, rejected around this 382 level. And so actually, if I went body to body here, it might show it a little bit better. Yeah, I think I like that too. Sorry, I wanted it right there on this one. So what it's showing me though is, let's say I got in a trade after this one rejected or after this candle here. What am I saying? I saw a lot of charts that showed that you entered trades and you just said, okay, reversal at Fibonacci. But don't forget about your candlestick confirmations either. Okay, so you could say, all right, well, this was I really wouldn't say this is a tweezer top because this isn't really a trend. This is more consolidation. But let's just say for illustrative purposes, I say, oh, well, this is a tweezer top. And that's why a tweezer top at this, 382 level. You don't want to just say, oh, it reversed at this Fibonacci. Remember your candlestick confirmations. Even here, all right, what is this? Why is this significant? Why does this look like a good area to enter? So that's another thing that I did want to point out. Don't forget your candlestick confirmations at these areas of support and resistance and at these Fibonacci levels. You can say, hey, well, this rejected around the 0 level of this Fibonacci. But, maybe, hey, okay, if this were a downtrend, I could say, well, this is a nice hammer. This was a nice tweezer bottom. This was, that wouldn't be, let's see, look for another one here. Here, you can say, okay, this is coming downtrend, and at this support and resistance level, this was a bullish engulfing, or this was a evening star, right? Or morning star, excuse me. And so then price proceeded to move up. Make sure you're remembering your candlestick confirmations as well. There aren't just random reversals or at Fibonacci levels. They are actual candlestick confirmations, and I think that'll help you as well. And then identifying your trend. So I'll do one more here. So this is more of an uptrend. I just wanted to show this as well because still, I want to go from left to right. So, okay, this is the most bottom point. This is the top. So I look at it. I'm looking at my support and resistance. And I am, excuse me, one more candle over. And I'm saying, okay, well, let me see if it fits a little bit better if I move this one up. Okay. Okay, now let's see if so you're still going, and I'm using my support and resistance levels to see if I like the way it's matching up. And I'm going from left to right because now even same thing, I'm in an uptrend. Oh, okay, well, price has come back about 23.6%, or, it's not really, it's a strong resistance against this 38.2% level. If I did it the other way around, just deleted a line instead of Fibonacci. It's all right. If I did it and I did it kind of the reverse or backwards, then it's not giving me the true level of, okay, all right, well, 618. But this isn't 618% retracement of price, right? We just saw, because if you even think about it mathematically, this is not almost 618% of this price. So that's just kind of something that I wanted to point out. Make sure you're doing Fibonacci from left to right. Make sure you're remembering that we're building from each week, week to week, building on the course, building on what you've already learned. Don't forget your candlestick confirmations. And also remember to really identify your trends and use Fibonacci as extra levels of support and resistance. But you do still need to make sure you have your support and resistance on your charts. All right, ladies, I think that'll really help. It will take away a lot of the frustration to always remember the basics, always incorporate those things on your charts. Ask your coach if you have any questions, please post in our coaching group, and we will see you in the next class.